everyone, K Kim here with the Traders Club, twotradersclub.com. Today is January 6th, 2017, Friday. Happy Friday, everyone, and welcome to the market update. I know it's been a while since my last update, but I've been busy trading, busy running a business here, and just personal time for growth and advancement and health. So I haven't able to, this is probably my first video in, I don't know, 2, 3, 4 weeks or so. But I've been writing articles this week, been tweeting out towards the end of this week after I got back. But hope you guys are doing well. Hope you guys your trades are going well this week. Let's look at the market here. Looking at Spider. Obviously, I want to focus on the 20 MA. I think 20 MA has been important key moving average all throughout the market, actually, this week and last couple weeks, this week and last week. Even you can see here on Spider, we actually this is a level that everybody was watching right here, and we gotten below this level. We stayed here, and then you can see that on the 30th, this last day of trading, it looked like a lot of sellers are coming in. We even broke below the 20 MA at that level. We broke below the 20 MA. We broke below this support that we've been holding for about week and a half or so. So I think this is why I think a lot of people, a lot of short sellers were looking at 218s. I was just kind of observing what people are saying about the market. I think a lot of short sellers were looking at 218. And even people who were missed out on this move looking to buy probably around 218. And it's funny how probably the market knows that somehow, some ways. Isn't it crazy how this market just knows how to fool the majority? And it looked like we're not, and I was thinking maybe we could see come down and maybe even come back down to 221-ish or a 219 to fill the gap. I think I was looking at some of those levels, and I think 50 MAs residing in that vicinity. I thought maybe at least we could come see down and come see around 221.78. But well, Monday we came to the market, Tuesday after the New Year, and then we gapped up. We were seeing a lot of volatility on that day. We stayed above it. 20 MA active support, as you can see here. And then the next day, Wednesday, we gapped up again. It was a bullish day. And then yesterday, Thursday, we kind of rested. And Friday, today, we slightly gapped up and we closed above previous high. What I mean by previous high is that this is a level, looking at more of a minor term perspective, as you can see that this was a level of resistance. It's been a resistance again for quite some time now. Even we rested on that level on Thursday yesterday, and today we got above it. What does that mean? Well, we're no longer cultivating minor term downtrend. We're no longer cultivating lower highs and lower lows. We're now cultivating higher highs and possibly continue to create higher lows in the minor term perspective. So as the 20 MA continues to move upwards, and then we have to give benefit of doubt to the buyers. Market looks bullish. Market has been looking bullish since the Brexit high, since the Brexit move when it made a new all-time high. Ever since then, market big picture sentiment turned bullish from sideways to obviously we're more of in a sideways move 2015 and 2016, and this was a kind of a dire level for the market fundamentally and technically. And obviously once we got above that level and cultivated a higher high, and that was it, and then we continue to do that. That was the election, that was the prior to the election and we continue higher. And as the market continues to move, and really though, I'll throw up 50 MA there also, as long as it stays 20 to 50 MA, as long as we stay above it. Even you can see right here, I tweeted it out that as long as it stays above 20 MA, market minor term sentiment is bullish, and so benefit of doubt must go to the buyers, and that's the reason why. Again, when we lost slightly 20 MA here, we got right back up, and 20 MA continues to slope upwards. So market looks bullish, and I'm sure a lot of probably a lot of bears are going to start calling this as a double top, and they're always calling things prematurely. I mean, I'm sure they called double top here, but double top won't be confirmed until it breaks the neckline. Not only do you need to break the neckline, you would have to retest the neckline and gets failed at that level. That's when you see that, hey, that double top is getting confirmed. Well, obviously that didn't happen here. So even here, I'll give you a quick example. I mean, this was kind of double top-ish sentiment. I mean, it was. You can see up, down, up, down. So that was that double top, and this was a neckline, right? And we initially broke below that neckline here at 224, and it retested it, and it didn't get failed and continue lower and continue to cultivate lower lows and lower highs. Instead, it broke the neckline at 225. And then we got up and we continued to go up by basically nullifying, trapping the bears of the double top. So now, on this potentially double top, and it's almost appalling for any of you to call double top at this point, but let's just go with it. It won't be confirmed until this thing comes all the way down here, retests it, and then gets rejected at the level, and then in that vicinity you can say that, hey, the double top is confirmed, there could be much selling coming. But for now, this is a recurrent resistance, and we may stay here for a little bit, but as long as that 20 MA is rising, we may come down, retest, and continue higher. Again, benefit of the Dow goes to buyers. Quickly, I want to go to Treasury bond. I actually been watching Treasury bond quite some time as it started plunging since the top here at 143. I think we saw a pretty steep downward move. This is 19% down, so or to the low here, 116. I've been looking at this trend line here. See that trend line? And then you see that support right here. I want to go long at 115. 150. I want to buy that dip 115. Obviously, we are in the extreme oversold sentiment on the Treasury bond. Looking at like a weekly chart, some monthly chart also. But that's the level I'm planning on going long there. But right now, though, we did find some support. In that vicinity of 117. 20 MA is starting to rise back up. This is the first time happening since October. But 50 MA is still declining. We're hitting that resistance now. So we haven't really cultivated any kind of a reversal yet. If this thing was going to reverse, you'll probably see something like this. And then maybe some kind of a left shoulder head inverted, some kind of inverted head and shoulders. But I don't want to go long. If this thing continues higher, I'm gonna let it go. But I feel comfortable going long at around 115-ish, and my target might be filling this gap at 130, maybe even above 143. But that's for the next time as the treasury bond starts to move. But for now, I'm watching it. Obviously, benefit I'll still go to the sellers as of today, as with the lower highs and lower lows. But again, the 50 MA is declining. So, but again, we are in an extreme oversold condition. I think this is kind of that oversold bounce. The question then becomes, well, is that oversold bounce actually gonna become something more than just oversold bounce? Maybe establish an uptrend, or are we going to fall back again and cultivating yet another lower high, right? This market loves to trap people, and maybe a lot of people, and this could be the bottom, but we'll see how that plays out. I'm going to be watching it, and I'll be watching that that 115-ish level if it does go continue lower. Here you can see even on here, there's usually it's after market comes down pretty hard, there's usually one bounce, and then there's another fall back. So there's a steep decline, and then we get that oversold bounce, and then you get one more new low, and then we create lower low. This is, you can call it a massive bear trap before going higher. So I'm wondering, are we gonna see something like that and come back down to 115 before going higher? Well, I'll keep you updated on that maybe on the next video. Let's quickly, some of my positions I'm going to share today is Apple, Intel, Boston Scientific, eBay, and then I'll end the video with this. If you're just seeing this video for the first time, or you've ever been watching my video on YouTube, here's you can go to my blog here, twotradersclub.com. You'll see my call options on Apple Part 2. Part 1 is here. I've been documenting my trade throughout, so you can check that out. So I'm not just saying things. These are verified trades on my blog. I first went long here, and then I closed out half here, and I bought the dip, added it more here, and I've been holding calls ever since. So now, you know, I thought about closing some positions here at around 117, 118-ish, but I made a call that I'm going to hold through it. I actually thought that we may test 50 MA or even come down to 111, and I you know, the worst case scenario may be come down to 111. But I think there's a lot of people are looking, just like, you know, how it was explaining about Spider, I think a lot of people are looking for 112. People who missed out on this bullish move, they're probably shorted, thinking that it's going to come to 112. Or people who missed out on this move, they want to see this thing coming down 112, maybe then buy it there. And I think that's why you can see, instead of coming all the way down, what happened was we found support at 20 MA. This is why I was saying today that I think 20 MA is going to be key moving average going in this week and going into next week. 20 MA, we threw that hammer candle right there, right on the 20. And then we held for a little bit, and then you can see today we're moving higher. We did make new high today. What I mean by new high is looking at this minor term on this line chart. You can see that right there. You see, this is another thing about that double top we've been talking about. You see right there, you go to line chart, you can clearly see it. That's a lot of people are probably, you know, a lot of shorts are probably calling double top. We got slightly below it. Again, what did we talked about just earlier? We need that double top slightly below it, get up, retest, and gets rejected. See, then you can say that that mini double top is playing out. Well, it never got rejected, and then we just continued higher. You can see even that wick, it looked like this was that kind of a short-term bear trap there. So looking good here. My next target is 120.57 on Apple trade. I will be closing out another half there and hold through. Let's go to Intel. I've been long in calls since 33.50-ish. There is article there, so you can check that out. So I'm not just, and I've been looking at Intel. I've been actually trading Intel quite some time. I first wrote an article and back in 2015, November 2nd, the 3 stocks set to soar, and one of them was Intel here. MGM is doing great also. Texas Instruments doing great, and we've been holding MGM quite some time now. Intel, Texas Instrument, we've been trading it, but we recently closed it out when it went to, I think, around 80s. Intel, there you go. So this was the analysis there, and then 33.80, I re-entered my calls, and we threw that double bottom here. Clear their neckline. This looks like, to me, more like a bull flagging pattern in the kind of a little bit longer, like in the minor to intermediate term perspective. Again, like I've been saying, the 20 MA is a key moving average. You can see even Intel is holding that 20 MA last, just pretty much this whole week, but just looking really weak here. It also kind of looks like, looking at more like a micro term, kind of looks like a bear pennant, right? So we got the bear pennant looking like, but if we look at this way, it looks like bull flag. So really at this point, if it breaks out to the upside, I think there could be a strong move to the upside, because there's a pressure getting built here. If this thing loses the 20 MA, probably the fast downside move here. And the next level of support will be then 35-ish. We got 50 MA coming at 35.93. I'll be holding through it. My next target on this is actually, I think if we can get above, if we can break out, I think for sure we'll get probably about 38. I think my target is around 40 though, before loading any position. So I'm still holding full call positions. I did wrote my article that when it gets to about 37.80, I may close half. Well, now that we've been building this pressure here, if this thing breaks out to the upside, I won't be closing it out. I'll probably hold it until 39, around 40-ish there. Let's go to Boston Scientific. Again, I just want to verify my trade, that I'm not just saying things. I'm not just all of a sudden market advances and I go, oh, I've been long. But so I tweeted out back in November 1st that if Boston Scientific, if it fills a gap at 20, I will be going long at that level. So I did that. I planned my trade. I trade my plan. So there's some more analysis there if you want to go. I've been trading Boston Scientific since like 12-ish. You can look at all these past articles and verify all of that, because I won't say anything if I can't verify it. I will talk about it on my videos if I can verify it that I've been trading it. So anyway, so this is where I entered, and obviously we, here, let me go back. So this is where you can look at part 6. So we closed all of our positions. We unloaded all of our calls at 24.40. We've been actually accumulating. You can see we've been accumulating. Not accumulating. I first went long here and then closed at 24.40, and that was just precisely right about here. And then we saw that plunge, and then I went back long at about 20.50. It initially came down. I held through it, and then you can see now here. Let me get rid of 50 MA. But like I've been saying, is that 20 MA here. I want to show you this chart. You can see that something has changed. You can see that you see that 20 MA, it continues to cultivate lower highs. But what does it do? As the 20 MA starts to rise back up, we're starting to surf it back up. We're now above the 20 MA, right? So as long as it stays above 20 MA, minor term sentiment is bullish, and so as it continues to move higher, I expect this to continue to move upside. Right now we are right there hitting the resistance, so that's the level. If we do fall back 20 MA to watch, if we lose 20 MA, it may come down to about 20-ish, 20 level. This is a band of support that need to hold for this to kind of bounce back up there. If we lose 20 MA, I would watch 50 MA. But so far, Boston Scientific looks good here. eBay broke out today. Pretty good volume. We haven't since late last year. We haven't seen this kind of volume. As you can see, we got a pretty good volume that came in today. Been long since 27.42. Again, I don't want to just say things to you guys. I want to verify it. So right there, I just wrote this article. eBay tweeted out November 2nd. Yes, if the gap gets filled at 27, I will be going long there. It's not analysis or charts. That's my plan for a trade. And again, I planned my trade. I traded my plan. I trade my plan. So I went long there. You can see double bottom reversal. We just cleared the downtrend resistance. Let's go to chart. Again, I'll end the video with this. So again, 20 MA has been a key moving average for for the indices and for a lot of my positions that I'm holding. You can see 20 MA held, 20 MA held. This again. What have we been talking about today? Also, double top. See, people are so they're always so inclined to call double top so prematurely. That double top won't be confirmed until this thing gets below it, retests and gets rejected. It never did that. We came down, hit that 20 MA, and we've been finding support ever since. So just because it got back to prior high doesn't mean it's a double top. Doesn't mean a double top. We saw initially a little bit of sell up, but we regroup, and then you can see a huge bullish move just right above the 20 MA. Also, you can look at this as stair stepping. High there, higher high, higher low. We got new high today. We cleared this downtrend resistance. You can see right there, breaking out today. My next target about 32.53. That's where I'll be closing probably about half of my positions before this thing possibly pull back and then resuming back up here. I think eBay will do well this year. eBay will do well. I think a lot of the positions I'm currently, Apple looks very bullish to me. Looking at big picture, I think Apple, Intel, Boston, eBay. I think those positions are going to do. I think 2017 is gonna be a bullish year. It looks like market is starting the year very strong, and I think it's gonna be a good year. But until next time, have a great night. Just quickly, if you want, the best way to follow my videos and trade or journals, and you want to get best way would be put your email address here in article alert, and you can get whenever I do a video like this or write a new article, you can obviously sign up, put your email just here, and whatever time I get a new post or video, then you can get that post and email. You get the alert in your email so that you will never miss it. And obviously, you can follow me at 2K Kim on Twitter. So when I do tweet out some of my plan on the trade, you can keep that into consideration. If you like to find out some of our, because I don't day trade, I don't swing trade. Most of my trades are longer term, 3 to 6 months, sometimes 6 months a year. I do have a long-term strategies that I do. We've been holding MGM. I've been holding MGM quite some time since I posted this video. I think it's been I'm willing to hold that for a much longer period of time. That's my longer term strategy. But day trading, short-term trading is very, very difficult. I found that obviously we all know that 90% day traders fail. So if you're more want to get my research on getting into trading longer term, and want to find out what other positions I'm currently holding, my plans are, what my next setup's gonna be, and stuff like that, you can go ahead and look at this page here, research plans. I was able to beat S&P 500 last 3 years. 2014 was a good year for me, but 15 and 16 was tough here. 16, obviously, I'm very pleased with that 16% gain versus S&P 500 9.54. So it's a good trade. Had a pretty good win rate. When the market shakes like it has been 2015 and 16, it's very, very difficult for short-term traders. Swing traders get slaughtered in a environment like that because it is very volatile. There's when you're in a volatile stage like that, the way you can able to maneuver that is that either you give a lot of leniency on your stop, because a lot of my stocks that I was holding, a lot of my stocks were, when the market was coming down, a lot of this stuff came down with it. I decided to hold through because you guys know that I actually been bullish on the market since really early this year. So when the market started tanking like this, I did my long-term analysis. I came to a conclusion we had a high probability the market will get back up. Obviously, nobody knows anything, and nobody knows for sure. Nobody has a crystal ball. Nobody's God in trading. So I just came to a conclusion there's a high probability, despite of what the experts been saying or the people saying on CNBC and all of that. Despite what they've been saying, I don't listen to it. It's a junk. You shouldn't listen to either. I wrote these 2 articles. This article, Bulls will nice spy for a reversal, end of January, and then the video why the stocks will bounce, and then in May and June I started doing videos on why stocks are not going to crash, 5-year bull run coming, things like that. So what happens is when the market starts to really volatile like that, what happened was when the market did come down here in late 2015, I held through those positions because my analysis told me that there will be a bounce. So then and a lot of that positions that I was holding through, they were losing money. They're losing value, the calls and shares. And then when the market starts to make its move to the upside, they all came positive, and I was able to close most my positions when it starts to towards the end of this year. That's why I was able to come up with a very, very good win rate. And sometimes, and obviously sometimes that's what it takes to become a trader, is that sometimes you live or die with your analysis, and you just, all we have is a probability. Nobody knows anything for sure. So you can, if you're, you know, kind of thinking about getting into more of a trading more longer term, then you can definitely look into it. Sign up for the research there. If any questions, you can feel free to contact me on Contact K tab there. So have a great night. Have a great weekend. I'll talk to you sometime next week.